Well, it's been a crazy year for the markets and U.S. stocks right now. Get this, we've lost more than $2 trillion in value. So should investors just keep playing the market or should they get out? Dave Manning and Dagan McDowell. Dave, let me start with you. A lot of folks are just kind of tossing in the towel here. Is that the right move?
Oh, I don't think so, Charles. I mean, look, I think it's always critical. The way that I look at investing is you have to have a little bit of a sense of context, which I think helps being at least a semi-history buff about the markets, because it helps put things into context, number one, and gives you a little less feeling of panic. Number two, I think you have to really thoughtful about what you think are the big things going on in the world and make bets on those things and try not to be reactive and try not to be the flavor of the day. And I think those things kind of get you out of that rat race of what should I do at this moment.
You know, though, Dagan, the problem, though, is that there's such short-term holding in the markets. And when Dave talks about being a history buff, a lot of people's histories go back to 2000. So they know at least two crashes. They know about what's going on right now, and that's their world. And they're, you know, it's tough.
Burned and burned and burned again. Burned by the income stocks that were the banks that collapsed, many of them essentially going out of business. Burned by the income stocks. I'm talking or energy companies. I'm talking about older Americans who need the income. But I always go back to something, and I know that this is what you think. When you're investing in companies, you are an owner. You own a piece of America, and you're putting money to work in American businesses, assuming you're just talking about the U.S., rather than if you buy treasuries, you're lending money to Uncle Sam. And given where the 10-year is in terms of the yield right now, you look at the yield on the S&P 500, it's 2.2% thereabouts. It's more income on just a broad basket of stocks than loaning money to Uncle Sam.
You actually get paid to wait, a better yield than bonds, and there's a good chance that if you hold long enough, you'll make a whole lot of money if you're patient.
Right, and you're an owner. You are a stakeholder in American business.
You know, Dave, I try to, I've talked about that a lot over the years, and it's so interesting to me when I see someone at Cracker Barrel wearing an Under Armour T-shirt and Nike sneakers, and they tell me they don't know what to buy.
Well, yeah, and they ought to buy Cracker Barrel.
Right, that's what I'm saying. Or Under Armour or Nike. You know, but here's the problem, though. Every time stocks go through these periods, there's a lot of voices out there. They say, this is the end. Get out now. What we see is a replay of March of 2009 where $100 billion in stock are sold at the ultimate low. And you feel like, wow, these people will never make that back because for the most part, they don't ever come back.
Well, I think they do have a better chance of making it back as opposed to jumping out of the plane right at the wrong moment in time. But I think one of the problems that we've got right now is that we're dealing with a bunch of policymakers, and I don't blame the policymakers as in they don't know what they're doing. Nobody knows what they're doing. They're trying to use tools and building this kind of Rube Goldberg machine around the markets that ultimately puts a whole lot of uncertainty and a whole lot of risk in it. That, to me, is finding a way to wean the markets off of those policy interventions is the best thing we could do for the average investor, in my opinion.
I don't think we can. I don't know if we can at this point. I don't like the existence of central banks, but they're here.
No, I don't think that you can either. In terms of, you might hear more rhetoric about that on the campaign trail. I think one thing contributing, and I know that Charlie Gasparino has talked about this, one thing contributing to the volatility that will continue is Bernie Sanders. Success is evil, according to Bernie Sanders. He wants to put in a transaction tax on, quote, speculation, which, by the way, we already have in this country. I almost called him not a nice name, but we already have it. It's called short-term capital gains taxes. Yeah. And Wall Street is nothing but a bunch of fraudsters. I think that kind of rhetoric, that kind of talk, and the possibility he could get the nomination, it hurts.
And I hope people can understand that. Let's separate Wall Street to places where those trades take place, and with Wall Street, just when you buy and sell American companies. That has nothing to do with those guys down lower Manhattan. Thanks a lot, Dave. Thanks a lot, Dagan.